On to more. I mean, let's talk about stocks which have anyways done well. So, yeah, let's think of companies which have outshone their peers relatively, or the index, if there is an index relatively, in the last few months or in calendar year 24. Philips Carbon Black or PCBL. It's seen very strong moves this year, up over 78% and a whopping 700 jump in the last 5 years. But this year, 78% is meaningful. Now, what is aiding this stock up move? Varsha Johnson to analyze that. Varsha, good morning. I mean, PCBL has announced some major plans, etc. But what explains this kind of an upside?
Well, thank you for that. Let's see what PCBL first of all does. So it manufactures carbon black, which is used in your tires, and is also manufacturer of specialty chemicals. Now, if you see in the stocks returns in last 1 year, company has given 78% returns, while in last 5 years, company has given 705% returns. Now, the interesting point is in last 1 year, where all the chemical companies have not given much returns to its investors, but PCL has given 78%. Now, let's see what's the reason for that, what are the triggers for that. So, we'll just divide in 3 sections. First, let's see what happened between FY16 to 19. So, revenue was up. This was on the back of capacity expansion in carbon black and also volume increase in carbon black. And EBITDA margin, if you see, from 7.6% to 17.4%. Now, let's see the reasons for this EBITDA margin improvement. One of the reasons is their shift from a carbon black, that is a low value product to high value product. This is one of the reasons that why EBITDA margin uptick we have seen, and also reduction in raw material cost has also aided the EBITDA margin. Now, then if you see, of course, shift towards the value added products. Now, from 2019 to 2024, let's analyze what happened there. So, revenue from 19 to 21, if you see, revenue was down because of the COVID and the economic slowdown that we have seen, but still margin from 17% to 19%. Why? Because of the cost optimization that every company was doing. But if you analyze from 21 to 24, again revenue was up because of the volume increase and of course post-COVID impact. But EBITDA margin was down. Why? Because of the high office expenses post-COVID. All the offices were open, and because of the increase in the employee expenses and office expenses, we have seen this EBITDA margin. But overall, if you see, in last 6 years, EBITDA margin has improved from 6 to 7% to 17%. The only reason, the only trigger point here is, and why PCBL has seen such a rally, is because of their shift from low value value added products to high value added products. Now, let's see what is the contribution to value added products for this company. So, if you see, the contribution from 2018, it contributed almost 24-25% to value added products to 65% now. But this is all in history. Let's see, will this rally continue for PCBL? Let's see what's the outlook for the company. So, company aims to reach capacity of 1 million tons from FY27 to 28, and they also have to increase their share of specialty grade, which is a margin accretive. So, imagine a company having almost 60 to 65% of their portfolio into value added products, aiming to increase their value added products, which will actually increase their margin. Then they also want to focus on the polymer and green chemicals in water treatments and detergents. Now, this is on the back of their acquisition of one of their subsidiaries, which will actually aid margin for them and also aid revenue for them. Then they also expect volume CAGR of 10 to 11% in carbon black domain over the next 4 to 5 years. This will actually increase their revenue potential. And also they actually are confident in maintaining their EBITDA per ton of 21,000 per ton, and this will and also they also aim to increase this EBITDA per ton, which will increase their margins in going forward. And the JV, so they've done the JV with Kintia for nano silicon products, which will actually use in their lithium ion batteries. So they are also entering into the EV battery. So all this will actually aid growth for this company. And lastly, if I want to talk about the valuation, I've done 2 cases. One is bull case and bear case. So in bull case, if I assume the company will grow at a 34% CAGR, for the next 2 years. That has been the history. So the EPS comes at around 27.8 as on FY26. And if I fast forwarded the PE, the forward PE as of FY26 stands at around 16x, which is quite cheap. But let's not be more aggressive, let's be conservative. And if I take a bear case of having a 20% growth for 25 and 26, the EPS comes at around 19 in FY26, and PE, forward PE basis FY26 comes to around 24x. So overall, the company has seen a rally and as compared to its peers, but valuation wise, if I consider the bull case, it is like okay, 60x, 16x PE, but on the bear case, yeah, the stock has already run up.
Varsha, I have a question. So bear case, you've assumed 20% growth. I mean, that's not small in a scenario of what other chemical companies are doing. So is that the bear case or the base case, part one? Part two, has the management guided to whether they'll match the last 2 years' growth of the 26% number that you spoke about?
So, Neeraj, in that, I would say that why I have taken 20% growth is, one is because of their the acquisition of their subsidiary, that is Aqua Chemicals. There they are targeting almost 1500 to 1600 revenue. Now this is on the very conservative side, I'm saying. The other thing is the uptick in EBITDA margin that they are expecting because of the value-added products that they want to increase to. And lastly, their JV with Canada, which will actually help in EV in the lithium-ion batteries. On the guidance part, they've not given the specific number, but yes, they want to maintain. They want to increase their volume growth to 14 to 15%, which will actually have a 20% growth.
Okay, Varsha, thanks a lot for that. And the reason why. Viewers, you might think why chosen PCBL. It's not a strict comparison, but you think of a chemical company, etc. Look at the comparisons, right? PCBL this year, 81% uptake. Aarti is a special case because they've had troubles, but this is symptomatic of what some of the chemical companies have gone through. Aarti is down 36%. PCBL has had a phenomenal year, and therefore the reason to do this. We'll do